big mover over the last few months. In fact, one of the big beneficiaries of this big move have been our next guests. We have Charandeep Singh as well as Varun Daga, who are the co-founders and fund managers at Girik Capital. Gentlemen, thank you so much for joining in. And as Sonia spoke about M&M, I was looking at your portfolio. The highest weightage in your portfolio is on Mahindra and Mahindra. What have you guys made of these numbers? And with this kind of up move that we've seen already, how much of this do you think is baked in the price, and what's the way forward? Charan, go ahead.
Yeah, hi. Hi, good afternoon to you and all the viewers of CNBC. Thanks for having us on the show. And as to your question on Mahindra and Mahindra, hard to say how much is baked in. I think our thesis here was and always that there is an SUVization trend in India. If you look at what the Indian consumers become more demanding, they have more disposable income. They don't really want entry-level products anymore. And we are seeing this across most categories. There's premiumization everywhere as GDP levels go up and income levels go up. So similarly, people would rather not buy a car, right? They'd rather buy a car which gives them a good experience, which is why you're seeing so much success with models of Mahindra, models like the Tata Nexon. People want to try new things. It's the human race. So Mahindra and Mahindra has some really nice, neat models lined up. And they've been ahead of the curve in catching the whole SUVization trend. And the Indian car market, if you've seen for the last 7 or 8 years, SUVs have outstripped the growth of the overall car market, and this trend continues. And M&M, being sweetly positioned, is a good beneficiary. This is the kind of market where things get priced in quickly, so you're probably right. In the near term, maybe there's not much to go, but would we continue to hold a stock like this? We would not sell it. We would continue to hold it. And this is something we would do so until these trends continue to be in place. As long as they continue to be innovative and sell more cars, there is no reason to sell the stock. Again, this is our own personal opinion and not to be construed as advice that we are handing out.
Well, we take that disclaimer on board as well, Charandeep, and good to speak to you, Charandeep, as well as Varun. What about Zomato? There's a debate that's going on all through the week. I think it was part of your portfolio, but I don't think it's there right now. If you could tell us whether or not you'll have lightened the position out there or exited, or you'll still hold Zomato. Just wanted some clarification out there.
Yes, so I can take that. So we do not, we do like Zomato, but we do not hold it in the portfolio as of now. I think the call which we are taking, we really feel that the bottom is probably made, but the call which we are taking on the overall market is that you want to see a lot more execution, because I think it's very clear that the market is not rewarding anything which is in the
Varun,
future.
just want to clarify, y'all don't have it right now, but y'all had it, right, Zomato? It was
Yes,
part
we
of the
did.
portfolio earlier.
It used to be a part of it.
And now it's not part of it. Go ahead, you're making a point.
Correct. So, what I was trying to say is that, it's very clear that the market is telling us that, you want to be with something where execution is in play and where we are not, giving something, 2-year, 3-year, 4-year forward, multiple. So, I think one needs to see what happens in terms of demand scenario. We also saw, demand scenario weakening over the last quarter. So we are keeping an eye on it. Let's see. But we are also wearing the risk management hat. So I think for us, it's very important to protect capital. And the idea is that, we should not lose money, once we buy the stock. So, I mean, we've managed to protect capital. We did not lose money in Zomato, and that's what's important for us. And if things turn around, if we see better numbers, we're always happy to get back.
Charandeep, another space where we can see some difference in your portfolio is on Blue Dart. It was a part of your portfolio earlier. Now we can't see it. And the other one is Bajaj Finance. Did you look to exit these two stocks? If yes, what was the thinking?
Yeah, so thanks for that question. So I must tell you that I'll try to answer that question with some greater context. Blue Dart is still part of our portfolio, although it's a little smaller in our portfolio than it was. Bajaj Finance is no longer in our portfolio because we've replaced it with some other financial services stocks. But where, one point that I'd like to make is, where we are incrementally seeing a lot of opportunity across our portfolio and across the market in general. If you notice our portfolio, almost 8 to 10 stocks are either in manufacturing, EPC, infrastructure, or capital goods. So a large part of our portfolio weightage, if you look at those 4 segments combined, is really moving in that direction and has been for the last 1 year. So you will see names like gearbox manufacturers like Elecon Engineering. You'll see names like ABB. You will see names like RHI Magnesita. And that's where we're really seeing the action in the economy. And I mean, this was, of course, corroborated by the budget, where you've seen so much more spent towards building out the nation. We also believe that this will be followed in the next few years by building out of factories as Make in India plays out. So I think you will, this is where our portfolio really is going, whether it's a power producer, whether it's a power ancillary, whether it's a steel ancillary, this is really our focus at present.
Right. We take that point. Charan, earlier you stayed away from IT for a long time. Now, after the correction that we've seen and maybe the belief that there might not be a big recession in the US, instead there would at best be a soft landing as things, progress from here, IT could be one of those spaces which could benefit from low valuations and perhaps not as bad a problem on the demand front. Would you concur with that view, and maybe does that tempt you to nibble into these spaces?
No, I think you're right. I mean, there is definitely a temptation to look at IT. It's such a large sector like financial services.
Right.
So we are very underweighted. But the way we look at businesses is we need to see a combination of many things. We need to see a combination of earnings acceleration. We need earnings growth, which is significantly above the average earnings growth of our portfolio. And of course, then we also need to see a valuation that leaves enough room for upside. So I think it's a question of IRR. There's nothing wrong with the companies. It's just a question of how much money we feel we can make over the next few years. That's where we would be at on IT.
Okay, all right, gentlemen, final question before we let you go. Getting into 2023, the consensus theme was banks and financials. Some have performed, some haven't. Now, from your portfolio itself, I wanted your view. I think on SBI, either you'll have lightened your position or the weightage has come down for some reason. So have you cut some weight on SBI? And the other 2 names, Axis and Bajaj Finance, have you all exited there as well? So SBI, Axis and Bajaj Finance. Go ahead.
So, I can take that. We have, rebalanced. I would say we still like Axis and SBI, but we've rebalanced into newer positions like 5-Star and other financials like IFL1. So I think what we do is, because there are so many names in financials to choose from, and now if you see, the universe has just gotten wider with small finance banks and microfinance lenders. Your PSUs have also come up, So you have a lot to choose from, and what we try to do is just rebalance to where the earnings acceleration will be there and the valuations are within our comfort zone. And also, we don't want to be in stuff which is so well discovered and everything is baked in. So there are places where we feel that a lot of it is already in the price. We would probably lighten up and exit and move to newer areas on stocks where we could make quicker returns and could hold on for a longer period of time.
Charandeep, Varun, thank you very much for joining in. We need to cut across to the finance minister.